On today's Breaking Views, the EU shows it can bank on its union after all. Rob, thanks so much for joining us. This is essentially a structure, isn't it, for banks to operate going forward?
Absolutely. You know, nobody needs to be reminded about what the bank's role in the financial crisis, ongoing financial crisis, and this is a way to try to improve things so that, you know, it wouldn't happen again. And look, nobody's trying to suggest, least of all those people here at Breaking Views, that this is some kind of panacea that is guaranteed to work. Nor are we trying to say that this is the whole thing done. You know, there are lots and lots of stuff still to be done to try and get this banking union deal or an arrangement properly fixed and properly implemented. What we're saying today really is that, you know, as a first step, you know, we should be quite encouraged by this, because the EU has managed to, in relatively short order by its standards, get a deal which is workable. OK, so it's only the first plank or the first foundation stone, but, you know, arranging it so that, you know, we have only the biggest banks being under this new umbrella, that the UK, which wanted to stay outside of the arrangement, can stay outside of it, but still has a significant influence in other kinds of ways. This is great. You know, there has been a negotiated compromise agreement which seems to suit everybody quite well.
Which is surprising, since they've pleased everyone, which is quite hard to do.
It is very hard to do, but and you know, it depends. So much of it depends on your sort of emotional sort of reaction to the EU. You know, actually, in Breaking Views, we're basically pretty pro-Euro, so we like this. You know, though I'm sure there'll be plenty of other siren voices, not least here in London, or at least over there in Westminster, who are much more Eurosceptical. Pick holes in it. But no, I think this is a good day for the EU, good day for banking too.
So if this is the first step, what other changes can we expect further down the road?
Well, the thing to really appreciate is that what we've got really today is a definition of who, or rather which banks are going to be regulated or going to sit under this new arrangement. UK-based banks are going to sit outside it, and it's only going to be the 150 largest banks within that Eurozone which are going to be regulated, so there are lots of smaller ones who are still going to remain with national governments. So what we've got today is a definition of who's in the party, if you like. We've still got to see how the rules are going to be put in place in particular, and what sort of mechanisms will be put in place to make sure that those rules are obeyed.
Now, Rob, I'm glad you brought that up, because I want to talk about the resolution scheme. If any bank in the Eurozone got into trouble, then the bank shareholders and the lenders would take most of the hit. But what if the losses were much bigger? I mean, wouldn't it fall on taxpayers again?
Yeah, yes, of course. I mean, ultimately, the taxpayers, the governments, are the ultimate backstop. As we've seen in the last crisis, those taxpayers, as it were, came to the fore quite quickly, though. What these schemes are designed to do, hopefully, or will do, hopefully, is to ensure that, yes, while the taxpayer remains the ultimate backstop, governments remain the ultimate backstop, you know, they won't be called on quite so soon. So shareholders will, of course, be liable for the first losses. There will be other stakeholders in the businesses that there are. And, of course, the other thing about it is that, you know, this whole scheme will try and move those thresholds sort of forward, so that, you know, we don't get into trouble in the first place.
And it's a collective backstop, isn't it, irrespective of which country the bank in trouble is in. But wouldn't this be slightly unfair? I mean, if a bank in, for example, Spain had issues once more, and taxpayers elsewhere in the Eurozone would have to pick up the tab?
Well, clearly there's lots and lots and lots, as I said, to sort out in the detail. And clearly, you know, there is the creation of the backstop mechanism, but just as important, in fact more important, are the mechanisms which put in place measures which mean that the backstop won't be called upon. So, you know, the Spanish bank, to use your example, hopefully under this regime will be sufficiently disciplined and capitalised not to get into trouble in the first place, and those are the things. But yes, ultimately, you know, we're in a union, we're in a partnership, and you know, yeah, if a Spanish bank got into trouble, one way or another, and those particular mechanisms still have to be sort of ironed out, the Spanish might have to be helped, yeah.
Right, we have to leave it there. My thanks to Robert. For more agenda-setting financial insight, watch our US Breaking Views show every day at 12:30 Eastern, 17:30 GMT. I'm Angeline Ong, and this is Reuters.